Hello and welcome to Pro Trader Strategies Market Commentary for Friday, May the 26th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, durable goods is the number that we got out today. This is one of the bigger economic numbers. Core durable goods, which strips out some of the more volatile aspects of that number, like transportation and airlines, or airplanes, I should say. Core durable goods is basically long-term goods, so like washer dryers, maybe a TV, things of that nature. So that came in negative 0.4, is expected to be an increase of 0.4. It is the first time in several months that we've seen this number go into negative territory. Basically all across the board, from inventories were rising, and the ability to place orders was not very good in that economic data point. But we did see a nice little number out of preliminary GDP. Came in at 1.2%, was expected to be 0.9%, so a little bit better than expected. And then durable goods orders, which includes airlines, transportation, automobiles, came in at negative 0.7, which was better than the expected negative 1.4. So airlines and automobiles driving up that number quite nicely. So then we also got University of Michigan consumer sentiment came in at 97.1, which was slightly lower than the expected 97.6, but in line for all intents and purposes with that prediction by the economists. On to the overall markets. We've got crude oil moving higher today after yesterday's massive sell-off on that OPEC deal, not coming out quite as bullish as what a lot of speculators had anticipated, that they were going to make a bigger cut in production. That didn't really come through, so the market really slammed down yesterday, but we're seeing some profit taking going on today and back above this 38 Fibonacci level, right there in line with the point of control. And we have the 9-day, the 200-day, and the 50-day moving averages all kind of starting to converge right there at the point of control, where that 38 Fibonacci level kind of coincides with. I talked about this. I think it's probably going to look to come down and test at least this $47 a barrel area. That being said, today looks like it's more of a profit-taking day than really a change in trend going on. Got the dogs busting into the room. One perk of having dogs being able to open doors, I guess. They don't know how to close the doors. They do know how to open them. Then on to gold futures. Gold futures are moving higher by about $10. A little bit odd that gold is starting to push higher with the overall equities not really showing much weakness. Everybody was pretty much happy, and then there's the wife. Everybody pretty much happy today with the overall broader markets being up on the day, as you can see with the bonds /ZB just slightly, albeit but by 3 ticks. Market moving pretty much sideways as the broader equities are as well. Dow Jones Industrial Average up only just a point, really unchanged, but it's still very near those highs as everybody's awaiting Amazon and Google to see what they're going to do, coming very close to the 1,000 mark yesterday. Then NASDAQ up on the day as well, up almost 5 points, not creating a historical high, but very near that right now. The E-mini S&Ps, again, yesterday made an all-time historical high yesterday. Today, just coming up short of that as of right now. pretty much an inside day across the board, as I've talked about, with the Dow Jones, the NASDAQ, and the E-mini S&P showing up here on the 30-minute chart, 30-minute bar chart, candlesticks on a daily segment last 20 days here. But as you can see, the value area high, the value area low, right in line with inside of yesterday's value area high and low, and the point of control lining up quite close to that yesterday's point of control at other rate. Also, that is a typical of an inside day. So the day traders would be buying as soon as we get inside of yesterday's range, and today selling once we start kind of testing that value area high from yesterday. That's the way to trade that on an intraday basis. Then on to IBM. This is a trade that I talked about yesterday, was trying to get out of. It's a strangle that I had on in the June. Was short the 160 calls and the 145 puts to create that strangle. I originally sold that for $1.09. Was able to buy back yesterday right on the close. It got hit on it for 45 cents. So covered that yesterday. Probably could get out of that a little bit better today as the market's kind of come back a little bit tighter inside of that range, and you're going to get a lot more theta decay and things of that nature. Volatility hasn't really changed, so maybe a little bit better pricing today than what I got yesterday. The other trade that I did was in ULTA, and you can pull up the ULTA chart. ULTA came out with better earnings, pretty good outlook actually, but the overall market stayed within the market maker move that I talk about in these earnings webinars. You know, when we're setting up trades around earnings, this is atypical. You know, yesterday I got hit on the Best Buy trade, was able to make it up with the ULTA today, thankfully. So the losses kind of offset. I actually came out a little bit positive between those two trades, and am positive for my overall earnings season right now. But the ULTA trade kind of helped out with that, and I went into that and did a strangle. So I went into the May that expired today, so I got a lot of theta decay out of that, and with that volatility crush, as you can see happening right now down here, that helped out as well. And it staying inside the market maker move was perfect basically. Traded it before it actually traded up to 310. It was probably right around here at 303-ish when I got out of mine earlier this morning, and went into the May and had originally sold the 320 calls and sold the 260 calls. So I was outside. The market maker move was $20 give or take. I went out $30 from where it settled basically, and was able to sold that for $2.65, bought it back for 25 cents, so made $2 on that one. Lost about $1.50 on the Best Buy trade, so all in all positive on those two, and then with the other earnings did quite well so far. All right, so that's all I've done for the markets today. Actually, I think I actually did do one more thing. I did do XRT. And the reason why I did this is some of the retail sector has been, and the kids are home from school, so they're busting in on my video right now. XRT has been beaten up, and looks like with Best Buy, some of these other retailers are starting to show a little bit better earnings than what some of the brick and mortar for the malls, I guess you should say, the Macy's and things of that nature, starting to show a little bit better. So I think that this might be starting to bottom out. So I decided to go in there. It's got pretty decent implied volatility. It was just slightly above 30. Went in there and sold the June 39.5 puts for 31 cents. So added that to the portfolio as well. And then that's all I've done other than today's webinar, getting ready for today's webinar, gearing up for the risk reversal. So go to protraderstrategies.com, sign up for that. It's kind of in line with this synthetic long, but it's going to give us a little bit more room with these markets kind of tipping off at the top. We might see a little bit of trending sideways. So this will be good for one of those types of situations where we can get a little bit of credit, and if the market spikes higher, we'll be able to take advantage of that. And we got a lot of wiggle room to the downside before we start losing money. Whereas with the synthetic long, it is plus or minus with the market dollar for dollar. This is going to be a way to give us a little bit of wiggle room if the market kind of has a bit of a pullback in some of these underlyings. All right, so go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.